Hello traders, this is a video about DAX, about the opportunities for November the 2nd, the Friday that we had as day traders and as swing traders, and also I will cover some of the ideas for the next period. So this in front of us is the updated chart with zones that I have posted on Friday before the pre-market. And I said that the context into the session was that the US market was widely ignoring the bad Apple earnings. It was higher in the overnight, and Asia was also higher, but markets were running on hopium because of the trade talks. And this kind of environment sometimes don't really care much about the price action and about technical analysis. So this was the first part of my tweeting. It was about context, and the second part was about these zones. And I said that main zones of interest for today was this yesterday high, which was 550 to 570, October 22 highs 640 to 670, and note that these thick zones are zones which carry more importance. They are the zones from the larger time frames. And on the downside we have this for 80-50 and 400 to 420. So that market is gaping up on hopium, and that probably the play is going to be to wait for the price to be exhaustion into the zones. So this was already posted, as you can see, at 8 a.m. and what happened next? And next, this is the picture from, as you see, from almost 9 p.m. and you can see that this was really a good roadmap for the price movement for Friday. And now let's go back to the charts and see how could we take advantage of these zones, this context, and this preparation. Let's go to the charts. This is the wedge which is clearly visible also from the higher time frames. We will go to see that wedge later, but now let's go on the 5-minute chart and observe what was the opportunities for us as day traders or as swing traders to do some trading. Again, repetitive concept. This happened several times just in the last 2 weeks. Gapping into support or gapping into resistance zone, and especially if this is the larger time frame zones, and those zones are those with thicker lines, then you will have a good expectancy fading that move. So we're basically selling into the strength. This is the gap up. On CFD chart they will just connect these candles, but if you look at the same on a futures chart, there is a clearly visible gap here. So that was a gap up, but gap up right at into the main resistance, into the resistance from larger time frames, and that was our first opportunity, even in pre-market, to short this market. And here again at 9:30 regular trading hour is already on to short this market, and this could be a short from this front of the zone. So you're shorting 640, your stop is above the zone, so if the zone is 30 points wide, you should at least use like 35-40 point stop for this trade. Then we observe what is happening, and price was stalling around 600 level, maybe a bit below, and really they were holding the price. So if you are shorting here and you observe that the price is not really going anywhere, and you can also it's prudent for you to besides the pre-market high and pre-market low, to draw the pre-market high and pre-market low, also to draw lines for the first hour high and first hour low. First hour high and first hour low means the first hour of regular trading hours. And this was the first hour low, and then again at 10:30 up to 10.55, was testing that first hour low and didn't want to go, below. And as soon as they started to go back, you should close your trade and take whatever the market is willing to give you, because the Friday was NFP day, and as I said in every video from Monday to Friday, on NFP days and near NFP days, we are getting this kind of activity, this kind of price action, chop. We don't expect anything significant or any big moves to happen in front of the NFP announcement, because what they will usually do is that they will stack the price near some good support or resistance zone and just waiting there for the announcement, for the impulse, should they make a break or not. And usually all of this is just one big scare, and usually nothing happens. If the price is stuck on the resistance, it will drop, or if the price is stuck to support, it will go higher. That is what usually does happen. But of course there are a few outliers, and sometimes we do have a breakout or a breakdown, and that is the reason why the market is careful. Careful into the NFP announcement, into the ECB press conference, into the FOMC meeting minutes, FOMC statement, and so on. But usually even those kind of news are, not very important. Nothing big happened. Nothing big happens. So this NFP news from Friday is also the good example of it. So bulls had a chance here to go long on this defended first hour low, and also not to overly stay in it, just go from here to here and close, because you don't know what they want to do. And once this zone was falsely broken, that was another chance to go short, and that was really the trade of the day, to be anywhere inside, not just take this last point at the back of the zone, but just to short this zone anywhere with your stop above this false a break of the zone, and just wait for the market, and the time to do the move for you. There's nothing to do. Just you had your order, you press sell button, you had your stop above this high, and you just wait with targeting yesterday high and targeting next zone. There's really nothing for you to do here if you are shorting this. After the NFP announcement, there were a bit of the fight, but the zone is holding, and you are also holding your trade. If you are here shorting it, then there is no need for you to move your stop or to do any kind of trade management, because remember the bigger picture. The bigger picture is this from the 4-hour chart. It is something that is shown many times, this wedge, this possible possible bearish wedge with possible, this could be possible another lower high, which has now a hidden bearish divergence. And I also added on this another thing, which is, let's go to the futures chart, which is the Fibonacci, last Fibonacci retracement level. 0.786 is here, and it was basically top of our resistance zone was that. It was falsely broken just by several points, nothing much, and this is the last chance of the big reversal, is this 0.78 fib retracement. So this could also be just another lower high, and as long as this sequence, let's go on daily chart, as long as this sequence of lower highs isn't interrupted, we could have another lower low, or maybe the same low. We shall see about that. But for now, this opportunity here is in the bigger context of the larger time frames and the daily chart and 4-hour chart and all of that, you are in the direction of the larger time frames. So there is really nothing for you to do there, because ideas from the 4-hour chart, from the daily chart, take time. That idea takes good amount of time for you to see, is it going to work or is it going to be proven wrong. And that idea can be used as a swing trade or as a day trade, but it usually takes more time to work. And example for that we had just a few days ago. It was from Monday. Let's go briefly there, and it was this here. As you can clearly see that this is a good resistance from larger time frames, and this place here, it was a 6-hour battle until they finally bring it down, and it was a very good move, but it was brewing here for many hours. And on these hours, these 5, 6, 7 hours, there is really nothing for you to do. Just sit and wait. You can go out, you can do whatever you want, but don't move your stop or anything like that. Alright, so that was the opportunity to go short here. If you missed that, there was another opportunity. Look how many times the prices wanted to go above this resistance, but after the NFP is released, if that was some kind of huge positive news for the market, they would make a breakout, but they didn't. They were just poking, and these moves will just take you out of the position. Let's say that you are shorting, that you are short. Let's go on 1 minute chart. Let's say you are short here now on this pullback, and you're short on 640, and you get like 40 points profit. Then you place your stop on break even, and boof, you're out of the trade, and now they're going down. And the same goes on every of these small moves to the upside, because you got to take into the account rotations. Rotations now, when DAX is making like 200, 250 points, even those small rotations is like 30 points, So it really doesn't pay off to be aggressive on your trade management, because in that way you will get a bunch of break-evens, and if you had a good idea to short this, maybe you will just get a break-even, or maybe even worse. If you are from some kind of bad location, let's say shorting here, and your stop is just like above here, you can be even stopped and make a negative trade, and then just 1 hour later it could be a 100-point move in your favor. So when you're trading these kind of zones, fading the large time resistance or support, it can take some time, and you have to be patient for it. Okay, so first target was actually here to the yesterday high, and note that yesterday highs or lows from the previous day could be very important, especially in neutral market for day traders, and then the institutions and others traders will defend those areas. So you could close your order here, bulls will go long here, but long on the back of the zone, because now this move have some momentum, and this move have some acceleration to it. And whenever you are facing the strong momentum, then you should be careful and enter from the best possible location. Best possible location when you're looking at the zones is this, to go on the back of the zone with your long, and this trade wasn't something that was working, because you got only like 30 points to the upside, and then immediately it was reversing. But this was good location, good try, because you had some. If you're going long here, you would have 30 points, and then if you didn't take that, because the logical thing would be for you to expect that the price will at least test this first hour low, because now it is acting as resistance, and that you could have from 550 to, let's say, 590, like a 40-point move, but it really didn't. It died here and reversed, but you had time, you know, to protect yourself, to put your stop on break even, because in this movement you're going against it and against big time frames. On this trade you are go with the larger time frames and with the bearish move. Okay, now when the price broken this support, now it acts as a resistance, and now this is another good opportunity for you to short this market, with the idea that the move is going to be to the next support zone. And by this next support zone you should really close your trade. Two reasons are for that. First, you have a zone and use it as a target, and second is that from the daily high, which is here, from 685, price went to 480, 200 points. So when DAX made the 200 points move, you gotta think that this instrument is exhausted, and that you should at least close your short and think about reversing your position and go long here. The other opportunity was to go long here, because this was the higher low on these small time frames, and this zone were holding the price, and this was also a good trade here to enter anywhere here. Let's say in the middle of zone on 490, and you could have to the to place your closing order in front of this zone to, let's say, to 430, you could have 50 points with a 25-point stop. So this could be 2-hour trade, this from here short to here, also 2-hour trade, and multiple risk reward trade would be for you to short here and hold your trade to this second zone. So that was the opportunity. This was a good roadmap. Let's go now to the higher time frames. As I shown, this possible bearish divergence, hidden bearish divergence, Fibonacci retracement, possible bearish wedge, possible another lower high. So everything that chart was shown is leaning to the path of the less resistance, and it is still to the downside, as you can see. So what now? What can we expect now in the coming days? So maybe the price will go again lower, and now we don't really know, because this move is quite a big one. There was a hole 60 point wide to this area here, which were 4-month trading range with untested breakout. This breakout was never tested on 10,800 level, and price went just to this, filling first 350 points of this hole, and now we have just these 250 points. Let's see cash chart, where I keep note of the gaps. This is gaps from the cash index, and a few of them, let's see these few of them which are closer to the price. This is here, gap from October the 30th. And also let's observe again this, as you can remember last week when I did a video on last Saturday, I also pointed to your attention this line from the daily and weekly chart, this trend line, which is originated from September 2011. It's looking like this on daily chart, and it's looking like this on a weekly chart. This red moving average is 200 weekly moving average. We had last week a closing below, and this week we have closing near it. So this is also something to to think about. And basically next week is there's going to be some news that are very important, like congressional elections on Tuesday in USA, and that could cause a massive shakeout overnight, Tuesday on Wednesday, and I think that the global markets will be, you know, quite still and sideways moving. We can expect that on Monday and on Tuesday the markets are going to be, you know, contracting, expecting to see what will happen on that congressional elections. And also on a Thursday at 8 p.m. we have the FOMC statement and federal funds raise. And beside that, the whole week is just news packed, so we could see some contracting, but also some kind of spikes. We shall see. So and another thing, the daylight savings time shift on in America is on Sunday, so we will again have the same time difference, meaning that we that live in Europe on Central European time will have at 3:30 p.m. the New York Stock Exchange open. So that was all from me for this video. Keep in mind this possibility of the an additional lower high, which could cause additional lower low. We don't know that yet, but this is something, you know, that we should carry on. And on Monday I will again post an updated charts with the zones and with some context and trading plan for you. That is all for me. I wish you a good weekend and a good trading.